Hello everyone, welcome to the monthly market outlook for November 2021. This is the PivotBoss monthly market outlook. For those of you newer to PivotBoss, I am Frank Ochoa, aka PivotBoss. I am author of the book Secrets of a Pivot Boss. Thank you very much for joining me here this afternoon. It is month number 2 of the last quarter of the year, and we're going to look at some higher time frame futures and look at some directional bias heading into the last couple of months of the year. We also have several stocks here to look at as well, and if you have any requests that you'd like me to get to, feel free to put those in the chat at any time, whether you're in the trading room or in the Zoom chat. I'll be monitoring both of those chats. So if you have a specific ticker you'd like me to look at, please enter that and I'll get to it when we can. Number one, I'd like to start off by saying FOMC is come and gone, and we have our new FOMC key levels. And you can see how the market responded to each of these FOMC key levels as they were announced. So this FOMC statement came out, 1 o'clock p.m. open price is the FOMC key level. FOMC statement, Fed interest rate decision, and then you have Fed Chair Powell speak thereafter, roughly 30 minutes after the statement, and that provides additional volatility and follow-through. And most of the flow here you see was to the upside, and by a significant degree, except for in crude oil. Crude oil was down quite a bit. You'll also notice here that prior to the FOMC key level and statement here, GC was selling off for several hours here prior to that statement, found a strong low eventually just below our 1760 market structure level. Some absorption here. That's your FOMC key level, and initially higher. So mostly bullish responses, especially from the equity futures. Here's YM. YM down here, 35,794, the FOMC key level, and rallying tremendously. So if you didn't see those FOMC key levels in the trading room here that I posted a bit earlier, I did post at least half the levels. I'll post them again right now. Additionally, if you are in the webinar, I'll post them here in the chat as well. Those are the FOMC key levels for the ES, NQ, crude oil, gold, RTY, and the YM. And let's take a look at how we handle these levels here in the higher time frame. So for example, if you just take a look at the FOMC key levels to date, there will generally be about 8 of these levels a year, or there are 8 a year, roughly 6 weeks apart. Been a Fed-based rally for a long time, and also the Fed comes in to help, and I guess in various ways. Today they announced tapering will begin. I believe as early as December, and so a little different here than what we've seen. But these are the FOMC key levels, and these two overlap right here almost perfectly. And then you have this one. The number one thing you see is year to date, and this is just for the ES, but year to date, generally speaking, a very, very bullish market. Very bullish trend, and this is in the face of quite a bit of headwinds. But this channel right here, the way it exploded to the upside, the higher low that came in, it was tremendous. We now have ourselves an FOMC key level. At times what you'll see is price rally away from the FOMC key level. As soon as you see rejection, you tend to see it come back to the FOMC key level for a retest. That can then be an opportunity to reject it again and bounce it back. Again, you could see a return back to that key level. That's basically how this thing plays out time and time again. So if the initial move is up, then we may see at least another 1 to 5 days higher. We may see some sort of rejection that occurs at these highs, followed by a return to this level, which could then be defended for a continuation to new highs. At times it can go offered, in which case then the bounce back would then be the magnet play there. So several ways that this thing can go, but based on the initial rally here away from this level, expecting more strength in the near term. You can see here how strong it's been ever since that channel was broke. Never hitting the 8-period average. That's tremendously strong. So you don't want to fade this unless a significant rejection develops or has occurred. For example, closing these on these highs, closing strong after the FOMC, and then if the market were to, say, open the RTH session tomorrow down here, that would be a tremendous gap and change of overnight sentiment. That could open up a scenario where some selling pressure were to be in place. So again, anything can happen at any time, but right now this thing appears poised for more strength until we see that strong high. Whenever we do, we have a very clear downside target here, and that's the 46.16 level. Now longer term, let's look at the longer term view here. Weekly chart, you can see how bullish this thing has been. Very clear if we were to go yearly pivots here. So instead of quarterly pivots, we'll go here. This is the previous year's range, and so far we've been working our way higher. This is the 25% extension. That's precisely the 50% extension. We've pulled back and we've bounced now. We had this as a buy signal before in the weekly time frame. A lot of signals that we looked at on this pullback on the weekly charts here were stocks that were leadership stocks, things like Nvidia, Google, and things of that nature. They've really come on strong in those during that time. Very strong movement here. Do we go and hit the 75, the yearly 75% target? So the next PivotBoss pivot up on a yearly basis is this one right here, and that's at 49.35. 49.35. Right now we're at 46.50. Can it make it by the end of the year? Any little pullback here could provide a continuation for an attempt to get that there, but that's the next major level up. From kind of a more intermediate basis, we've had our eye on this key range, and the rejection of the key range low has led to a continuation through the key range high. You have your upside targets right here. 48.05 has been the target that we've talked about that could be hit by the end of the year. The 46.77 would be that midterm target. We're almost there now. So that's a more doable target. It's a target that also could be reached by the end of the month, theoretically speaking. Very strong target. Let's see here. If we drop this stack down to the daily time frame here. So again, based off of this impulse move and key range, just to recap what we talked about during the November monthly, or rather the October monthly outlook, we mentioned this key range low is very important, and if you could trap below there, that could provide an opportunity to return it back toward highs. If we change this also back to a quarterly, one thing we mentioned was while this is the key range low and it's okay here, the better opportunity would be taking out the quarterly low and then taking it back up the range. And it fell just shy of doing that, and instead took out the key range low, bounced back to the mid, took out the mid, back to the high, held the high, and is on its way higher. So again, if you're looking at a target to end the year, 48.05 is a really good target that has a very good shot at being reached. The next significant pullback, something in the 4,500 level or so, could be a nice finish into the end of the year. So that could be something to look out for here for the ES. If we take a look at crude oil, significant movement for this one. One of the things here with crude oil is that it actually broke through the 75.50 level and 76 level this month, and that's the first time it had done that in 7-8 years. Tremendous move. Not only did it break it here, here's the look right here, it broke it the top of the key range there. It came back, retested the top of the key range there, and exploded to the upside, reaching a high at 85.41. This was a great pullback here, a nice continuation up, but a lower high develops inside day yesterday, squat bar, and a massive break to the downside here today. That's a high range day there. $3.39, 144% of average range, and pretty big move. If you're looking at a scenario that mirrors this, you don't have to look much farther than July, beginning of July here. You'll notice here that it had seen a tremendous move higher, and you saw a very strong high, a pullback, and then a lower high develop, and that was a $3 down day right there. You're seeing the same type of action here. Very strong move up, pullback, lower high here, and a very strong $3 day down here. This could be day one of a multi-day decline where we drop back toward that 75 to 76 zone for a retest. So a big time move to the upside today, tremendous weakness. One level again that gave out right here these previous lows, 80.78s I believe, somewhere in that zone, held very nicely, took those out, and is now sitting right on the previous month's midpoint. That's the last line of defense right there before this thing opens up much more weakness. But it's also the zone that if crude's going to bounce tomorrow, just say from a day trade perspective, if you want to engage this from a day trade perspective tomorrow, watch this low, and after hours overnight trading, a rejection of that low, so a push down and then popping back above it and holding the low, opens up a return, a quick short-term return to 80, 82 from below. That is your FOMC key level. There's also a shot to see a further fade back to the midpoint, although the quick bounce back up here is about a +1. You can get a +1 from that low back to that level early tomorrow if there's a rejection at the previous session's low. Now, if that play does work out, remember, we have just seen a lower high, and we're currently in a lower high, lower low phase. Any morning strength tomorrow is likely to be seen as a selling opportunity for a shot at breaking through the previous month's low and extending this selling pressure. So right now, very similar to what we've seen here in July, lower high, big time move down. We're seeing very similar. This is the type of day that tends to extend selling pressure for at least the next 2 to 3 days. So again, there could be a little bit of a bounce tomorrow, but that bounce could be an opportunity to sell this thing for a return back toward 75 to 76. So some thoughts right there. Yes, that's correct. That's correct, Adrian. That's 76.90. Very good CLVN right there. Right at the quarterly high, right at the breakout point there. That looks like a very good magnet up ahead, at the very least. That's right. Another one here I wanted to talk about is Nat Gas. Last time we talked about Nat Gas and the potential for a move to go from 6 to 9 now, right? If we looked at this thing from the higher time frame perspective, the weekly chart, and I believe I need to add even more data. So let's add let's go 20 years back. When you go 20 years back, you see additional market structure. So if you just take this back, your recent highs right here, call it 650, and you bring it across, that's normal market structure. Here's your $5 level. That's the market structure we're in right now. So last time around, we hit the top, and I mentioned we could theoretically drop all the way back to $5 and still be a buy because we're likely in this new market structure. We did. We dropped to 4.825, and we've bounced since then. And we're now holding in the range. but we're inside this range. It has to stay above this pivot low here, 4.825, because as soon as we fail, we start dropping back toward that 3.4 level where the initial breakout occurred here. You go back into this zone. If this is a market where we're going to see additional strength, then are we about to make another market structure move up? So whatever this is, are we about to do that again and go again? And the next major market structure level above is $9 right here. So you can see the high right there, here, 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 here. Whenever it broke through, it held it and failed. Same thing here, here, and here. So $9 is the next level. So we talked about that last time around, is maybe in a wild scenario that occurs. Well, now you look at the daily chart here, and you can see how price has played out over the course of the last month now. It has actually maturely traded here through, or between rather, that 6.5 and 4.8 level. Very good trend that's developed. There's actually an impulse move there from this low to that high to that mid. That could help measure out the next move. And in that case, it would fall shy of that $9 level and instead put you closer to about $8. So either way here, again, that could be a very good target up ahead. And as soon as it's able to break out of that key range. So it's building some energy here. Still doesn't look done. I mean, it could still open this thing up to the upside in tremendous fashion. But just wanted to talk a little market structure with regards to NG. Another one we talked about last time was SI, silver. And this one, I think we were, what was it, October 4th was the second trading day of the month last year. Let's see, that's the first. Yeah, so it was a Friday to Monday. So Monday was the second trading day. That's October 4th. So it's the second trading day of the month. And price had already bounced off of this low. Great extreme reversal and was starting to hold. We mentioned that behavior right there was indicative of perhaps a failed range expansion to the downside below 22s. 22s, very important market structure level. Slammed down, raced right back up, and is holding. So we mentioned there's two targets to the upside. A retest of 22, or holding 22 on the retest here, and it hit the previous close right on the button. Opens up a move to 25. That's the first target. Last target would take you to 29 if you wanted to hold that long. And it almost got 25. I mean, it got 8 ticks off. So for all intents and purposes, it hit the top of that market structure there that we were looking for, which is kind of that midway point, right? That nice little midway point. So a good initial move, and you can see again that little head and shoulder pattern down there that developed that help ID that move. It's, sometimes the head and shoulder is all about market structure at times where actually in many different ways it's all about market structure with the head and shoulder pattern, but the 22 is the key level. So it bounces, it hits the key level, bounces up, goes through the key level, then when it comes in and passes back above the key level, it becomes the level to defend for continuation, and that's your 3-point reversal or head and shoulder pattern off that level. Very nice continuation, a very nice hit at the edge. Now we're seeing a little bit of a buy signal, a higher low off the right side here, and this almost looks like a larger head and shoulder now. Again, if it can hold the pullback early this month, perhaps there's a shot to push through the 25 sooner than later and get to those 29s some point down the road. But looking pretty good down here on these lows. But it may take a little while here, but as long as it holds above 22, there's a shot for 29 down the road with silver. Alright, I wanted to talk some stocks here. There's a few stocks that we've been following over the course of several months, one of which is Tesla. Tesla's one that we had on the radar as a buy signal. And we noted a couple of things with Tesla. And initially, when we looked at Tesla, it was in a different context here, so I will bring up the other view. So you can see right here, we have the PivotBoss bands. These are the yearly bands in Thinkorswim. Initially, when we looked at Tesla earlier this, at the end of the summer here, it was in Visual Trader, and this was based off of the fiscal year here. So we had pinching of those bands, and right here, basically, going into the August time frame, end of July, right in that zone, we noted the pinching of the bands. We noted how compression had developed over the last several months, and we noted that, as crazy as it seems, 650 could be an opportunity to double your money in Tesla over the course of the next 4 to 6 months. And so that's exactly what's happened. Price has rallied from 650, which was exactly value. Here's the top of the pinching bands here, and we've seen extreme rally away from that zone. Again, you can never foresee that type of price action and that it's going to be ahead. But what you can foresee is, or what you can see, is the compression of the bands. And the compression of the bands lead you to believe that there will be expansion at some point. The level of expansion always remains to be seen, but expansion can be very tremendous, especially if you have many, many, many months of compression that is developed in the meantime. So Tesla, we talked about it back in July at 650 as being a double to 1300. Today, 1200 plus, sitting at 1213 now. Tremendous. It's 87 points, $86.14 from being a double at 1300 just since that July time frame that we talked about. So tremendous movement. It only needs to get to 1300, which is right there. And basically that happens to be the 100% target on the monthly PivotBoss ADR target. So it has a shot. The other thing, look at right here, we're breaking through R3 on the yearly bands. That may actually cause more of a price increase up ahead. So just tremendous movement here. It took a while for that move to really materialize, but the first 100 points were pretty quick. After that, it messed around for a little bit, but ever since it got through 800, that's where the rip has really happened. 50% since it broke through 800 to 1200, and there still could be more ahead. So that's Tesla, a little follow-up. Now, one that we talked about before, now this was a great opportunity as well. This is Lucid. In September, we used Visual Trader and we looked at the EV groups. So over here, this is Tesla. You can see I have it in my EV vehicles group. Look at right now, it is currently the strongest group in my entire map, which includes a ton of industry groups. So very strong. Obviously, Tesla is a big component of that right there. But I mentioned at the time all the various ones that were in our group and the ones that look like better opportunities. Obviously, Tesla, it's not easy for everybody to own a $700-800 one, but it might be a little bit easier to own, say, Blink at 30 or 35, or Workhorse down here near under 10, or Neo, right? Anytime it was below 30 or now at 30. So there's various times here. One of the ones that really stood out recently, and it was perfect timing, was Lucid. When we did the September market outlook, Lucid here was, well, had just been above, had popped back above the level, but when we saw it in the room here, below S3, and it was on major market structure support, it then popped back up, and the idea was that from those lows there, 16, 17 lows, it could become a double and perhaps go longer down the road. And so far, it has done that and then some. It doubled easily, no matter, if you got it any time from $20 even up to 21 on that, in September here, it doubled up to 40 plus. Big time move. Now this one is a market structure, and it's a new market structure above, creating that structure. So you see this high right back here to that low right there. That's basically it, kind of that day right there. We're back inside there and developing there. You obviously have your lower market structure here, but at some point, you may continue to develop here and make your move higher. But a great move out of Lucid in that time. The next one that I'll talk about out of the group here is one that our traders know here. It's Workhorse. This is another one in the EV group here. And this is one that, again, very speculative buy opportunity. That means that, again, this one's pre-revenue, pre-profitability, it just not going to get the quarterly earnings support that you would normally see out of something that just prints money like an Apple and those types of stocks. But this is at a great spot for a speculative opportunity, where you could get a free trade out of this one relatively quickly, and then you can have a free trade to do as you please. So a couple of things to like about this one. Number one, you have this major strong low right here. That strong low, and if I bring it all across, it is the 2-quarter lows. We have developed a small range below that level, and then we popped back above it the last several days. You can look at the monthly pivot range here, and we had a lower value with a confirming bias, but then prices broken above it. So now you're breaking that staircase, and you're going to hopefully start a move higher. The one level we talked about here in the room is if it can stay above $7 now. And we had an initial entry trigger at $6, and it hit 602 as the low. But now if it can hit $7 or stay above $7, it has a shot to make a move back to the quarterly midpoint. So if you're going to reject this quarter's low, then you're going to return to the previous quarter's mid. And if you're going to reject CLVNs down here, then perhaps you'll return all the way to value at some point down the road. And, that would be a double just from where we are, right? This would be 1444 is a double from the price at the moment. The thing about this one, again, is you never know when a stock like this will pop. Sometimes it won't pop for a very long time. So again, put in here an amount that you can afford not to sweat over at night. It's an opportunity here that, again, could turn into a free play. And what I mean by free play is, for example, if you were in right now at 722, it is a 100% double to go to 1444. And if you buy 200 shares down here and you sell 100 shares up here, you have now taken out your initial investment, and now you have a free 100 shares from $7.22 that you can keep for the rest of your life, or for the rest of this company's life, or you can hold it for a year to see how it plays out, or 2 years, or you can just wait until that time that all EV stocks pop, right? So many different ways to go about it, but that's the basic approach to that type of idea. So that is Workhorse. EV group participant, piggybacks off our Tesla and Lucid ideas that we talked about earlier this summer and also earlier this fall. Another one I'd like to talk about, again, Tesla was a compression candidate. And you're going to see here that Square also becoming that as well. A major compression candidate here at these highs. A tremendous rally from the lows here below 40. Below 40 and rallies to 280. Now we've been doing the split here between 240, 290 basically, and you have the 190 zone right here. Very clear trading range action. But in the recent quarters here, price action has compressed to an apex now. It appears as though we could be due for some expansion, very similar to Tesla, in that the expansion could be significant. I'm not saying it's going to be like Tesla where this thing rallies like this, and I'm not even saying it's going to go up. It can expand in either direction, but the fact that we are compressed to this edge right here, chopping around a flat VWAP, again, no value really in this area right now. It's the edges that are in play, and so selling anything above 280 or buying anything below 200 has been the play. And at some point, this compression here, I think, is going to, at the very least, lead us to a move to an edge, which is to say that we may see a move up to this edge, which could be fadeable again, or we could see a move down back to this edge, in which that could be a reverse event there. So this one right now in a compression phase. You're not seeing really that compression in terms of the PivotBoss bands from that view. But again, you definitely see it in the price here. We'll see if we can get some movement to an edge again. Anything below 200 here, between 190 and 200, could be a phenomenal fade back up if we see some type of price action of that manner. Here's one right here that is in play today based on earnings. This is Roku. Roku here, we had it as a buy candidate last month. We had two levels here, or three levels. 480 is the top level, 380 is the middle level, and 280 is the bottom level. 100-point splits. We mentioned that 240 here would be the ultimate entry, because 240 would also coincide with S3 on the yearly bands. And a 240 entry back to the highs would double back to 480. So 240 is a really good one. The one we had before over here on this day, as price was dropping, was 280, because 280 is that level. And today, here's where we closed, and then earnings comes out, and you can see earnings here, 48 cents. Price drops on earnings, hits 280, 280.00, and now is trading 287s at the moment. So 280 again in play right now, at least in after hours trading. That was the case. We'll see how that develops tomorrow. Do we open the gap down there? Does it open with a big gap down and press to the downside? Is it an open drive scenario to the downside, or does it try to fill somewhat and stay above 280? That's going to be important. But again, if it can get to 240, it's not a bad opportunity here based on the recent highs way up there. Not saying we get to those highs anytime soon, but based on where we've been here, it's a significant discount at a good market structure zone, and a significant undervalued opportunity based off of the composite bands. So it missed by 10 cents. Forecast 58 and made 48. But again, 240 still the major level, and now testing 280. Another one here I wanted to take a look at was PayPal. PayPal is one we've been watching here in the room. One of the levels that we talked about was a composite low volume node, which at the time anywhere between 220 and 225 for the most part, and you can see support right across these lows here. And the low today, 225.31. Great test at that edge. It did fairly well today to hold it. It had the double bottom down there. It was a triple bottom low and eventually rallied. When you look at the intraday chart, it looks fairly decent, and it finished strong. That's not bad. Now, when you look at the actual bar, today's bar, 59.9% of ADR, not a significant bar in terms of range. So it's a tiny day, and tiny days normally aren't rejection days. But it was a great spot in terms of price and market structure. The other thing, though, here's your S2 and S3s, much lower. You'd like to be lower based off of value in relation to yearly value. But, you know, at times this thing is so wide based off of this tremendous move, you may not get there. That's why S1 has been support this year so far. Meanwhile, R2 has been resistance so far this year. So there's no guarantee we get way down there. This is a good, strong level. 225 right now, if it can continue to hold, has a good shot to bounce back toward the previous month's mid, perhaps work its way to 250, maybe up the range, as high as 310 down the road, based off this large trading range. And again, you know, keep in mind it may not be a straight line up. You know, sometimes these things might bounce really good, like this one back here, and then it gives you a hard jolt down, and etc. But the market structure edge is the key level there. You'd like to see it continue to stay above 225 on a daily closing basis. A failure to stay above that on a daily closing basis could open up the price structure in the range below. So you have 170 to about 215 in that case, or 220. So this zone you kind of want to stay out of if you're a bull here, because if you start to fail here, you start to rotate way across this range. So PayPal, a very good zone, great CLVN, lows for the year so far, or very close to it, and you'd like to see this thing continue to hold 225s for a shot at 250 and perhaps higher on a longer term basis. Another one here to keep an eye on. This is Himax. We looked at this one today in the room. This one has earnings coming up, so beware of earnings. This is tomorrow before the market opens, so this one could be a big time mover right out of the gate, or it can be a big failure right out of the gate. And if it's going to be a big time mover in a positive way, it's probably because it's opened with a positive gap, and it's an open drive scenario where it's pushing higher in the direction of the gap. It's starting, you know, with something like this or like this, where it's opening positive and it's driving higher. The reason I like this one is because, again, market structure edge, $10 right here, 10, 10, 10 right here, all in here. It has a bit of a rounded bottom that's developed down here in accumulation for a while. And that can tend to be an energy building stage for a push higher within the range. And then you got 16 to 17 that could be in play. So right now we're trading 1088. If it can stay above 10, there's a shot to go to 16 to 17. Pretty good return wise. The other reason I like this one here, failed new low today. See how price pushed through 2-day lows, failed to extend the range and maintain acceptance below there, and instead failed back above those levels and closed strong. That type of price action can tend to be indicative of a move to come, and earnings could be that catalyst. Additionally here, lower value relationships month over month with a change of bias today this month, which means any pullback early on is defended for a shot at breaking that pattern and starting a new trend to the upside. So a lot going for this one, but I would say beware of earnings tomorrow, and confirmation above 1150 will really open this thing up. But you'd like to see a positive gap and a a transition phase through 1150 if at all possible. All right, let's take a look now at the next one here. We have ATVI. This one is right at a market structure edge as well. You can see here a tremendous gap down, 14%. This one also on earnings here. Again, not looking good in terms of the year, but also just not looking good at all this quarter. This is the worst day it's had in over a decade. I think '08 may be the worst day since '08, down 14%. That's a massive, massive move. And if you look at it from the highs of the year, 105, and today's low is 64.5. Tremendous weakness and a major gap down. So what's next for this one? Can it bounce back? Obviously, the gaming industry has been very strong, but it's had its ups and downs. Generally, it has its rhythms and flows. This was a big flow up, bad down, rounded bottom, and during this rounded bottom we had it as a buy, and it did really well. Now this is the down phase. So we've come back and we've hit this 65 level, major market structure edge. Look at that right there. 85, the last market structure edge up. 100 right here. If you look down below, 50 here, and down below there you got 40. Those are your major market structure levels. You might find one here or there in the middle as an intermediate term level just to bisect some of these larger ranges. But these are the main ones. And the rule here, the unwritten rule perhaps, if it fails at a market structure edge here like it does at the bottom, then it rotates to the bottom in most cases. Case in point, right there, and rotates to the bottom. If it's moving back above, so from a lower to this one, it'll move back to the top. But once it gets there, there's a tendency to come back to the bottom, then go back to the top, because again, it's in a range in that market structure. Over here, this one failed, created market structure below. It failed here and dropped to the bottom. So this one's either going to rally to the top, like this one, and we stay between 65 and 85, or it's about to give up at 65 and we go to 50. That would be huge. I mean, that would be over 50% as we dropped from 105s. So based on all of this, the zigzag map here that you see, this 65 level is a major market structure level. After a huge gap down, you like to see that it finished today with a tail at the lower edge, the lower portion of the distribution of today's range. You'd also like to see that buy signal here come into play and price close above the day's mid. That's not bad. So 65, can it get back to a gap fill? Can it get just back to the midpoint of the month, which is the breakdown point here? That would be a pretty good move. 72.5 or so is about that target. Right now we're trading 66.75. So again, this one could be a good short-term level to bounce back, with targets at this edge here, 72, perhaps a gap fill back towards 76, 77, and then over time up toward the upper end of the market structure, which was, as we identified, 85. And your failure point, again, just 80 is that 65 level. Can it hold 65 on a daily closing basis? If it can't tomorrow, major weakness ahead. So this could be a great bracket trade here tomorrow, whereby a close above the high and you continue in that direction, a close below the low and you continue in that direction. Right now looking bullish here for ATVI from a short-term perspective after getting basically its butt kicked here all year long. Zillow is another one here, speaking of butt kicked. This one also trading here now well below our initial buy zone. We talked about this one for a long time and how it's been getting more and more discounted against its 210 high. Tremendous downtrending price action, downtrending VWAP as well on a yearly basis. We mentioned before, if it got into the 70 to 75 zone, that might be an opportunity to pick it up cheap. And if it can get back to the top of previous market structure, it would be a double at 150. drawing out market structure like this. Today it sliced through there like a hot knife through soft butter. It went right through 70, right through 66, and closed 65.47, down 25% today, and that's after being down double digits yesterday and the day before. It was trading 105 just last week, and now it's trading 65 today. That's a huge 40-point discount, tremendously quickly. So where to now, and how far does it go? For this one here, we have market structure that's pretty much edged up, and this is a tremendous level that must be held, and we have it here at 66. This might be a decent low. If you look at our key level 66 right here, it was a CLVN for us for a while. It's filled in a little bit since then, but look at that high, look at the high, look at the high. That's the breakout point. So last year it broke out through 66, rallied to 210. Today it gave it all the way back. Well, not all in one day, but it completed the move today that it began in February. The next zone down is about 26. That's our next key level below, and you can see it's the bottom of the range. So are we going to fail at 66 and drop back to value and 26? You know, the way that this one has gone, obviously they over-leveraged themselves with the amount of properties they bought and the inability to turn those in a supply chain shortage type of market. That type of thing is obviously, as you see in the stock price, a recipe for a disaster. Now you're at an edge that could theoretically drop this thing by another 2/3 if it can't hold this level. So 66 is a must hold, and we're below it now. 26 is the next level below. You got 37 as value. If you want to go 50, 51 here is the next kind of CLVN. Maybe that's the next level, 50 below. So this one needs a strong low soon. Maybe this market structure level will do it. But from current levels, if you're looking at falling VWAP for the year so far, this was such a hard move, it gapped it down to about 115. Even then right there, you need to go a little bit lower in order to double it back to value. It's just a very, very dire situation, but major market structure edge here at 66 for Zillow. Another one we talked about is Pinterest. We mentioned how this one has also been beaten up big time. Higher high failure here, or actually it was a lower high failure. Lower high, sharp lower high. This, I believe, that was the news to purchase this one, I believe, by PayPal, and then PayPal abandons the Pinterest takeover and shot them back down. If you ever want to hurt a rival, I guess that's the way to go. Hey, we want to buy you. Oops, never mind. And this thing just gets crushed. So the level we had when we talked about this one before, I believe as early as last month, was we were talking about a 45 test. Can we get to 45s? If we can get to 45s, there's a potential to, again, if at some point down the road you retest those highs, you've doubled. So we are there right at this moment, 44.68. We are there at that level. But when you look at the chart, there's no real signs of rejection. You do have a narrow 5-day range down here. Maybe there's a stop run day through 46s tomorrow. But there's no real rejection yet down here. At some point you have to find that rejection. But you are at S3, which is very good. Obviously waiting on earnings here. That could provide a catalyst. But 45 is the earliest potential entry back to 90 from a long-term perspective. How much lower do we go if we can't hold 45s? Then you start to work through prior market structure here, which could take you, as low as 30. Do we get down that low? And now you're looking at 66 or thereabouts as being not only yearly VWAP, but the 200-day. So does 33 open up a potential here? So right now it's at 45. It's not looking its best. No signs of rejection. Still sitting on S3. This one's still in the oven right now after we spoke about it last time. Another one here to keep an eye on is QS. That's QuantumScape. This one had a tremendous move right around this time last year, actually. This might have been right on or just after Vaccine Day. That's November 13th last year. Exploded to the upside. It opened that day at 15.95. The day before closed at 14 and change, and then it rallies to 130 plus over the course of the next several weeks. All the way back we go, and now we may be due for another attempt higher, dare I say. If you look here at the rounded bottom, right in here, great rounded bottom. That's a great accumulation pattern, however you want to slice it this way. And then not only do you have the great bottom that's rounded off, but you have a good, what I call the rim of the pattern. That's this portion right here. That level is being tested right now. That's a big time level. I don't know if we're ready to move just yet. I don't know if this is the transition phase that's right here, because it looks the part. Big move up, failed new low, continuation day. Looks the part. Took value bid. But it has to get through 32s here at some point. Once it can do that, it's all uphill and markup stage from there. And at that point, you're probably working your way up to about 52 to 54. That's your recent highs here. That's a pretty solid move. So not sure we're ready to break out just yet. Sometimes these can build a little longer before they go, but 32 is the level to watch. All right, and then here's another one here. This is a swings chart right now, a swing idea, just a very short-term idea. Could just be a day trade idea tomorrow. The way that the markets rallied off the FOMC key level, a very solid finish to the day. This one had an early sell-off to begin the day, took out two-day lows, but by the end of the day closed above the high. That is, or right at the high, somewhere around there. That's a wick reversal, almost a bullish outside day. Very strong move. You can see how bullish the trend is, honoring the PIMA trigger zone. Tomorrow morning, if there's a pullback, that could be an opportunity to get in cheaper for a push higher. Obviously a very expensive stock, so you'd be looking at some sort of spread, option spread in this one. But there's several ways to do that. Again, if this thing's going to rally from these lows, you have 721 as a potential target that could be hit down the road. So you could be looking at an out of the money spread, 700 to 710, or even further out. You could be looking to sell the at the money put spread if you wanted to, and let this thing go. However that goes. Again, there's the call spreads too. So, you know, a number of ways, and that's what's so flexible about those. But the idea is if price opens with a pullback, hold 680 to 682, and then look to push higher towards 700. That would be a good day trading target tomorrow. So 680 to 682 up to 700. And then you're looking for a 1 to 5 day continuation towards 720. So that's a short-term swing idea. If price can't stay above 680 tomorrow for long or by the end of the day, that short-term idea is off the books. One that I see here that has come up on the list is PROG. Let's bring this one up right now. Looking at this one here for the first time. A cheaper stock, obviously. This one was sitting around $1 here and rallied 400+% over the course of last month. These are always a little bit more tricky here, as they can be influenced a little bit more sometimes in certain ways. But Just purely against market structure, the $2 level very good, the $4 level very good, and we're kind of in this range. So to get that transition back up into this range here, you likely stay kind of in that range a bit. And when it can get above 4 is when it starts to make its move back up toward 8, the other end of this range. So, you know, you always think that this thing can run until it just kind of goes sideways for a while, until the next thing influences it. Best case scenario, it can stay above $2 and work its way through 4, which would open up the next market structure above. If anyone else has any other ideas here, post it now. We'll get to those as well. I did want to take a look at SPCE. We talked about this one as being a good one to trade on a speculative basis as well, where 15 to 50 plus has been routine, it seems like, this year. We've dropped to S3 now, getting a low of 1798. We have 14, 15 just below CLVN and VAL as well. No signs of rejection just yet. So while we're at a decent little area here for a bounce in terms of S3, we haven't seen a real good rejection just yet. But at some point, it may be worth the gamble here to jump in if it can get down here below 16s. A quick bounce back toward value, or a quick bounce back toward the previous close, and it's a pretty decent percentage gain. So still looking at this one as one that if it rotates too far below 15 or 16 here, it might be worth a shot at bringing it back up. That's been the case over the last couple of years. All right, another one to take a look at here, BYND. Looks like Thinkorswim is thinking, not swimming. Well, while that's thinking, we'll bring it up over here. Here's BYND. Okay. Here's BYND. I wanted to look at it against this range over here. You know, this one has continued to find lower lows, which has been an issue. You know, it had a really good strong support here, but then lower low here, and you start going lower, 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 and it just doesn't stop for a while. Very aggressive downtrending price action here month over month as well. But we did have a level here that we talked about before. Well, we had two levels. I think last month we finally said, you know what, if you hold out, it might be better, because if you can get it back to value and see VPOC, it might be best to get it from down here. But 90 has been a good zone as well. That 93.5, 90 zone been a key level. Good little bounce here so far off that zone. Back above S3 as well on the yearly bands, but they kind of sloping a little bit lower. Not bad. Not bad. It's kind of like some of the others where it's been downtrending so much it may have to prove it, although it's starting to do it now with the lower value with a change of bias here, or at least a break to change the bias. So if it can continue to stay above 100, it has a shot to start to bounce a bit. Again, 90 has been a big level here, and it got to 91.55. Wiped out the lows. New 52-week lows for this one. And starting to bounce again. If it can stay above 100, it might have a shot to push higher. And lastly, CAT is another one that was asked about here. Caterpillar here holding the 190 level. Big time CLVN. Previous quarter's low. Bouncing here, doing a little battle here with the previous quarter's midpoint. generally it's had a quarter-over-quarter downtrend like this, below weekly value as well, or yearly value rather. So for the most part, hasn't been the best, but it has held the 190 zone on the major pullback. That's a key level, CLVN. Other than that, it's really kind of stunted in this range a little bit. It just kind of looks to me like this range here. You got the range above it. You got the range above that. And then if you want to, you can even bisect that range a little bit here. So the fact that it's back above 200 here after bouncing off this key CLVN 190, to me looks like it has a good shot to try and work its way back up toward 220 and the top end of this market structure. But I'm not super confident on that, right? It's a choppy mess, but it looks as though it's trying that. So if it can stay above 200, it has a shot to work its way back to value and work its way up. Failure there, and we're kind of working our way back down within the previous range. All right, I think that pretty much does it here that I see in terms of the requests. Again, I want to say thank you very much for joining me here for our monthly market outlook for the month of November 2021. Again, you can find me at pivotboss.com. You can also find our trading room at pivotboss.ecofin.com. You can find my book Secrets of a Pivot Boss as well at my website or on Amazon, anywhere you shop for books. Again, thank you very much for joining me here today, and we look forward to seeing you in the room. Take care and have a great night, and I'll see you soon.